This is absorption costing revision. Come on, tell me. What
Okay,
you
so
did.
absorption costing is basically the total costing that's taken into account.
Hmm.
It's long term. So basically in absorption costing, there's a cost center. It is a
Total
place
cost
where
is taken into account. So what do you mean by total cost?
variable cost plus fixed cost.
Okay. If you take variable cost into account, it will be which costing?
Marginal.
Okay, go ahead.
So there's a cost center, which is basically a place where the expenditure is charged. So there are two types, which is the service and the production. The production is where the product is directly produced, and the service center is where it helps the product to be produced. For example, assembly and packaging, and for production, the example is machinery and painting.
Okay.
Then there are two types of expenses, which are direct and indirect. So, indirect, the cost is directly traceable to the product, and in indirect, it's not directly traceable to the product. So, with indirect, you apportion the expenses where the expense is related to more than one department.
Can you spotlight where you're talking?
Yeah.
Hmm.
So you apportion the expenses. This is when the expense is related it's related to more than one department. And with direct, it is always allocated because the expense is related to one department only. Then reapportionment happens because the service cost does not have any product to sell, so they have to reapportion the cost on suitable basis. Like in where is it? Where the cost is apportioned to, if the assembly and packaging is apportioned to the machinery and painting department. So first allocation happens, then apportionment, then reapportionment because the service department doesn't sell the product. Then, that's it. Then there's OAR, which you have to calculate, which is
What do you understand by capital intensive and labor intensive?
capital intensive is when the business works more with machinery compared to labor. And labor is when there's a higher proportion of labor working compared to machinery.
What is the benefit of that?
Of labor intensive.
Capital intensive and labor intensive,
Okay,
yes.
so if you use capital intensive, there'll be no sick leaves that are taken because machinery can work for up to 24 hours, and it is
No,
more
no, 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 no.
efficient.
How do you use that capital intensive and labor intensive?
So you mean to say while calculating the
Yeah,
OAR?
yeah, yeah.
Okay. So if machine hours are more in one department compared to labor hours, so you'll use the machine hours. And if the labor hours are more, you'll use the labor hours instead of the machine hours.
Okay, how do you calculate OAR?
You do budgeted overhead upon budgeted activity level.
And budgeted activity level will depend whether it is.
Labor intensive or capital intensive.
Okay, how what is under absorption of overheads?
Under absorption is when you recover less than your expenses, and over absorption is when you recover more than your expenses.
So how do you calculate under absorption or over absorption of overheads?
We give you the actual overheads then.
What is actual overheads made up of?
Actual overheads is you multiply the OAR that you calculated with the actual activity level, the
No,
hours
no.
that they
Actual
do.
overheads is all the actual into actual.
Okay. Yeah.
Okay. Then
Hmm. Then you minus the budgeted one that you found, and
budgeted
then
overheads, how do you get?
by doing budgeted, you do the whole calculation. Budgeted overheads upon budgeted activity level. No, no, that's OAR. You do the whole apportionment and everything to get the budgeted overheads.
Budgeted overheads is based upon budgets, na? But for under absorption and over absorption, how do you get the budgeted overheads?
You do the OAR into the activity level,
Which activity level?
actual activity level,
Okay. And remember this without fail, okay? OAR into the
actual
actual
activity level.
activity level. Then what will you get?
Then you'll get the budgeted this thing, the total, and then you minus
If
it
the
from the.
answer is positive, then
If the answer is positive, then you've overabsorbed.
it's under absorbed.
You minus the um Actual minus the recovered, right? The absorption.
Yeah.
Acha, okay, then under
If your actual is more than your budgeted, then it is under absorbed. And
hmm.
actual is less than your budgeted, then it's over absorbed. I'm
Absorb.
giving you time, please write it. Yeah, tell me.
Okay, so over absorption is when you recover more than your budgeted overheads, and under absorption is when you
1 minute,
recover.
1 minute. Over absorption is when you recover more than your budgeted overheads.
Yeah,
More?
yeah.
More than budgeted overheads or actual overheads?
Oh, sorry, actual overheads.
Very sure on what you speak.
Yes.
Okay, tell
So,
again.
okay, so over absorption is when you recover more than your actual overheads,
Hmm.
and under absorption is when you recover less than your actual overheads. Now,
Okay.
to calculate your recovered, to calculate your budgeted overheads, you'll have to do OAR into the actual activity level. So then there are two
All right.
things which is labor intensive and capital intensive. Labor intensive is when the business works more with labor compared to capital, and capital intensive is when the business works more with machines. So
Hmm.
use the numbers that are given to you to calculate the OAR. So if the machining is more, the machine hours are more, you will use the machine hours in order to calculate the OAR.
Hmm. Okay. Stop. So then after asking under absorption and over absorption, what is the thing that they ask you?
Price to quote.
No, they will ask you reasons for under absorption and over
Oh yeah.
absorption.
Okay.
So what is the reason for under absorption of overheads?
So under absorption is when recovered is less than actual overheads.
Okay, so what is the reason for that? First
Either
reason is this.
you either
Second
produce
reason,
so you produce less than your estimated, like your budgeted overheads.
production is less than your budgeted. Okay, what will
Yeah,
be the reasons for over absorption of overheads?
your production is more than your estimated,
Yeah.
and the other one would be that you sell more than you estimated.
Over absorption is you've recovered more than your actual overheads expenses.
Hmm.
This would be your first reason for over absorption.
Hmm.
Okay. And then the
Okay.
second reason would be
That you
produce more
produced
than
more.
your estimated. Your
Hmm.
activity level was more than your estimated.
Okay.
I'm giving you some time, price to quote, make a proper note of it, and I'll
Okay.
ask you. If you're revising, tell me what is a cost center?
Cost center is a place where the expenditure is charged.
What do you mean by allocation of overheads?
Allocation of overheads is when expenses related to only one department.
Apportionment of overheads.
When expenses related to more than one department.
Okay. How do you calculate profit?
Profit will be um selling price minus variable minus which will be the contribution minus fixed cost, which will be the profit.
Okay, fine. 1 minute. Give me methods of inventory valuation.
Oh yeah. AFCO, LIFO, and FIFO.
What is FIFO?
FIFO is first in, first out method.
AFCO
AFCO is uh, average cost inventory valuation.
and LIFO.
Last in, first out.
Okay, the advantages of using FIFO.
FIFO is whatever inventory comes out goes out first. So it avoids the risk of the inventory becoming obsolete.
Hmm. So this
Then,
is only one advantage that you've given.
hmm,
What else?
then it is easier to calculate.
Easier to calculate it. Uh, but see, in actual, your inventory is going out of the go down in whatever way it is there. FIFO is
Hmm,
just a method to value the inventory. So what will
Hmm.
you write as to advantage of inventory valuation as per FIFO to write?
Hmm.
I'm asking you a question, darling.
Yeah, I'm thinking. For first in, first out, the advantage means it should be na that it is easier to calculate.
Okay, the 2 marks advantage you have to write now.
Okay. Then the other one would be that it is approved by IAS 2,
What is IES2?
International Accounting System.
What does it tell?
That FIFO is approved.
Okay. What about LIFO?
LIFO is also easy to calculate.
So for both you will write simple to calculate.
Means it's one answer that I can remember for both now.
You can't write same answer for both, na?
Okay, so it is when prices rise, profits will fall. How is that an advantage?
Sorry.
How is the second one an advantage? When prices rise, profits will fall.
Because your closing inventory is there in your go down, right?
Hmm.
So it is valued at that price and we treat closing inventory as your income.
Yeah, but it's saying that profits will fall.
So don't write because your cost of sales will reduce, your cost of sales will increase, right?
Oh yeah, because closing inventory amount is more.
You forget that. Say something which you know. For
May
LIFO.
correspond to flow of inventory.
May correspond to flow of inventory top of pile. What does that mean?
No idea.
Top of the pile means what is there on the top, you remove it first.
Hmm.
So what is there on the top is going out first.
Hmm.
So advantage of LIFO is it is simple to calculate first thing and it
Hmm.
corresponds to the top of the pile. That means what you can see first, you are taking that and you are throwing it out first. You are selling it first.
Okay.
Okay. Can you give me again two advantages of LIFO? Again, two advantages of LIFO, darling.
It is simple to calculate and it responds to the it may correspond to the flow of inventory, which is top of the pile.
AVCO.
AVCO is also approved by IAS 2 and mm, it provides an average price for the goods issued
And
and it automatically adjusts for price rises and falls.
again,
It automatically adjusts for price rises and falls. It is approved by IAS 2 and it provides an average price for goods issued.
give me a reason why you should not value inventory at selling price.
Because your profit will be, wait, if you value inventory at selling price, your profits will be overstated, which is against the principle of prudence.
Hmm.
Then profits will be over, even assets will, your current assets will be overstated. Then even one more rule states that the cost of the inventory should be valued at either the selling price or the NRV, whichever is lower.
Cost or NRV.
Cost or NRV
Cost or NRV, whichever is
was lower.
low. Okay, fine. The three benefits of using absorption costing.
Both fixed costs and variable costs are taken into account. So it is easier because you won't have to differentiate between them. So it's easier to calculate and it takes less time. Then it is a recognized method of inventory valuation.
Hmm.
Then
It is useful for setting the selling price.
yeah, and it's better for the long term as well.
Okay. State two reasons why overhead may be under absorbed.
So overheads may be under absorbed because of under absorption will either be because recovered is less than actual overheads or you produce less than your what you estimated.
Actual production is less than forecast
Okay.
production. Actual production is less than what?
Forecast production.
Okay. If you have a special order that asks you that you should accept this order at below selling price.
Hmm.
So what are you going to see, or what factor are you going to take into consideration for accepting that order?
First, you're going to calculate the profit that you're going to make,
Hmm.
right? Uh, and then if the contribution is
You will
higher than
calculate profit, or you're going to calculate contribution.
both, you'll get in one statement only. Yeah,
Profit and contribution are two different things, right?
yeah, but then you can calculate
If
both,
you
na?
want to accept the special order, what do you want to find out?
The contribution.
Yeah. So if your contribution is positive, you can accept the order.
Yeah.
Okay, fine. This is what I wanted to know. Difference between allocation and apportionment.
Allocation is when the expenses related to only one department, and apportionment is when the expenses related to more than one department.
What do you mean by a production department?
Production department is where the product is directly produced.
Service department?
It helps the production department to produce the product.
Okay. Reasons for reapportionment of service department costs.
So reapportionment happens because the service cost does not have any product to sell. So they reapportion the cost on suitable basis to recover the costs.
Limitations of absorption costing.
It is not useful for short-term decision making, and it is more time consuming. No, it's not more time consuming. It's easier actually. Then it cannot calculate the
More time.
break-even point.
Sorry.
It cannot be used to calculate the break-even point,
And
and I don't know, I know.
it can be subjective.
Meaning?
Depends from situation to situation.
Okay.
Advantages of using absorption costing.
Advantages are that it is useful for long-term decision making. It is um what was it? It is accepted by IAS 2, and then absorption costing is also easier to calculate because it uses both the costs and you won't have to separate the costs.
Useful for setting the selling price also.
Hmm.
Okay. Uh, just a minute. Okay. Can you give me drawbacks of business using a budgeted OAR?
Budgeted overhead absorption rate. It may not be accurate because
Hmm.
it uses estimated numbers.
Hmm.
Then what else would be there? So if there is over absorption or if the overheads are over absorbed, the prices may be set too high, which may lead to customers not buying from the business. And under
Under absorb
absorption,
and over absorb is related to is found out based on the actual overheads, right?
yeah.
My question is, what is the drawbacks of using a budgeted OAR?
Mm. First, to it
How
is
do
that
you how do you calculate the budgeted OAR?
you'll do budgeted overheads upon budgeted activity level.
So with that you will get one particular rate, right?
Yeah.
What is the drawback of using that one particular rate to absorb your overheads or to recover your overheads?
You're using an estimated number, so the number may not be fully accurate.
Okay, if your figure is not accurate, then what will happen?
It may lead to over absorption or under absorption of overheads.
Yeah, if your overheads are under absorbed,
Hmm.
that means you're setting the prices to
Low.
which would result in
Um, the it, the
lower
cost
profit.
will not be recovered, lower
If
profits.
you are using an estimated figure, and if you've chosen a lesser amount, that means
Hmm.
your overheads are under absorbed. So you're
Yeah.
setting the price low. If you're setting the price low, that means you're going to get lower profits.
Hmm.
If you're setting the prices higher,
Hmm.
then what will happen?
Then customers may not want to buy from the business.
Think about under over.
Over-absorb, the prices will be too high, so
So
the
that
profit,
means you are over absorbing the overheads.
yeah.
Then it may get you higher profit, but it will lead to losing out on your customers.
Hmm.
Again, I'm coming back to the questions for 4 marks.
Hmm.
Drawbacks of business using budgeted overheads. Overhead absorption rate.
So the estimated figures can be inaccurate, which may lead to under absorptions or over absorption of overheads. So if it is over absorption of overheads, it may lead to prices being set too high, which may lead to a loss of customers. And if there's under absorption of overheads, it may lead to prices being set too low, which would result in lower profits.
Okay, 1 minute. You have a special order to make, okay?
Hmm.
And you have a new customer. He's asking you to sell you the product at below the selling price.
Hmm.
Okay. And if he's asking you below the selling price, contribution is positive. So give me the financial factors or the non-financial factors where you have to decide whether you should accept the order or not.
Okay, so for financial factors, you would say that the contribution is positive.
And you have to show the calculation, okay?
Yeah, okay. Then if it creates like a profit, then you show that. But then over here saying that there's a loss of 160, so you'll say that in the
But then
financial
the
factor that,
case, give me the financial factors.
yeah, so that will
Financial
be fine.
factors would be positive contribution, calculation of positive contribution.
Yeah,
However, the allocation of fixed costs may be, fixed overheads may be inaccurate.
okay. Then
Mm,
it makes a loss, you'll say.
Non-financial factors.
And then now non-financial factors. So
Three
the other,
financial factors, when it's a positive contribution, you will definitely get questions where contribution is going to be positive.
okay.
Hmm. Tell me financial factors.
Financial will be that it makes a positive contribution. You'll show the calculation, and then you'll say that the allocation of overheads, the fixed overheads may be inaccurate.
Okay.
Then,
Non-financial factors.
then you'll say that existing customers may feel like they aren't getting the proper pricing because
Hmm.
the other ones are getting for a lower price. Then the other one will be that it's a new customer, so you don't know if they'll repeat the order again or not.
Hmm.
And whether the quality of the product will be affected.
You will write that.
So you can write that. No?
You write whether the quality.
Oh, will the quality be affected?
Okay, 4 factors that you should consider before changing your supplier.
Hmm. Factors considered. Firstly, the price that they're charging for the materials, the raw materials.
Hmm.
Then the other one will be, okay, the delivery. So if the supplier offers proper, efficient delivery, then the
Efficient
quality of the
delivery or
product.
timely delivery.
Yeah. And then quality, the quality of the product is supposed to remain the same.
Hmm.
Then the credit terms, so if the supplier will provide the same credit period for the product.
So, 4 factors that you should consider before changing your suppliers.
Hmm.
Okay. Explain why a business calculates separate overhead absorption rate for each production department rather than a single rate for the whole factory.
Because you're supposed to reapportion the service
See, if
departments.
I have P1 and P2, I have two production department. One is P1 and other is P2.
Hmm.
Okay. So I am going to calculate a separate OAR for production department 1. I'm going to calculate a separate OAR for production department 2.
Hmm.
Why do I do that?
Because they have different apportionment numbers, like 30% and all that. That's given number of employees and all that. That's different.
Department A is suppose machine intensive.
Uh,
Okay, capital intensive.
hmm.
So I take machine hours.
Yeah.
Department 2 is say labor intensive. So I will take labor hours.
Hmm.
So depending upon the activity level, I calculate the OAR.
Yeah.
Now understand the question properly. Why does the business calculate separate OAR for each production department rather than one rate for the whole factory?
Uh, First is going to be that if the department is machine intensive or labor intensive, then according to that, machine hours or labor hours is supposed to be chosen.
Hmm.
Another one would be that it will be more accurate to have separate overheads absorption so that they get a more accurate selling price.
4 marks.
And how many marks? Three.
You got 3, but we have to write for 4.
Okay. So
You can see
the
my screen,
overhead,
right?
yeah, so the overhead absorption rate should be chosen to just reflect the activity of that department.
Okay, you need to memorize these theories. Okay, anything
Yeah.
can. Okay,
Hmm.
how do you get the quoted selling price?
Okay, so to get the quoted selling price, you will get the direct material
Hmm.
from which you will minus the if there's machining and finishing, you'll do that. You'll have to multiply
For
whatever hours.
direct labor, you will take which rate?
Oh yeah,
Direct labor, you will take OAR.
the number that they've given now.
Direct labor, you will take the actuals that they've given.
Okay,
But for overheads, you will multiply what? The time
the
into.
overhead.
Yeah,
Okay, so for the direct labor, you'll take the actual rates.
yeah.
Okay, and then for overhead, you'll take the OAR.
Okay, fine.
You'll add it and you'll get the total cost, and then you multiply by the units. Then whatever margin or markup is given, you use that to calculate the price to quote.
Okay. Now, sometimes your directors plan to introduce system of budgetary control.
Hmm.
Okay, budgetary control is that they are controlling the processes and everything. And
Okay.
this system of budgetary control is going to reduce your profits.
Okay.
So you want to, they asking you to advise the directors whether they should introduce their system of budgetary control. That means should they go ahead with their plans or no?
Oh. So budgetary control is going to reduce the profits, right?
Yeah.
Okay.
So should we introduce a system of budgetary control or no?
Mm. Miss, over here saying will motivate managers and employees, but if the profit falls, then how will they be motivated?
So basically, when you're having your formal budgets,
Hmm.
okay, that means you have your target sets, you have your deadlines, you know that you have to match this figure, you know that you have to finish this much of production. This is the actual deadline set for you.
Hmm.
So when you have a formal budget, it informs all the departments of the common goals that they have to achieve.
Okay.
So it will give a clear indication to your managers about their responsibilities.
Hmm.
It will improve coordination between the departments. So this is how it's going to motivate your managers and employees
Hmm.
and improves the performance.
Okay.
Budgetary control basically is done so that you motivate your managers and employees to improve performance. There is enough of planning. If planning is there, targets are set, and
Hmm.
targets are set, so you improve performance. But it's time consuming. Your cost would increase, your profits would reduce. Some employees may be very reluctant to change.
Hmm.
So, advise whether your directors should follow budgetary control or not.
Hmm.
Hmm?
Okay, so they should follow the budgetary control because in the long run, this will help them get more profit.
If you have valuation of inventory and you're valuing your inventory as per FIFO,
Hmm.
so your closing inventory will be out of your
First, the last inventory that is there. No?
FIFO, not LIFO.
Acha, okay, FIFO will be the first that came in,
Hmm?
the one that came in first.
And for this
FIFO,
LIFO method,
the inventory that came in last.
okay, fine. Um, 1 minute. What is meant by piecework payment?
Oh, by what?
Piecework payment.
Don't know that is.
State what is meant by piecework payment.
Acha, okay, like piece rates. So payment that is made to the employer on the basis of how many units they produced.
Okay. Advise whether you should accept the order or no with using financial and non-financial factors.
Okay. So is there a positive contribution? Yeah,
Hmm.
there is. So it provides a positive contribution. Then you show the calculation. Then you'll say that it increases the revenue. Then two only they want. Then a non-financial will be that that other customers may also demand for a lower price. Then if the product if the quality of the product will remain the same or no.
Okay, fine. Give me benefits of using cost volume profit analysis.
First is that it is easier to calculate and it's good for short-term decision making. But the disadvantages are that it assumes the fixed costs are same, that the all the products that are produced are sold, and that variable cost per unit is the same.
Lovely. Benefits of operating a system of budgetary control.
The benefits will be that the employees will be motivated,
Hmm.
employees and the managers will be motivated, and it will help to improve the coordination between the workers.
Limitations of operating a system of budgetary control.
The profits will be less in the beginning, and it is based on the estimate number.
Accounting term which describes splitting of service department cost based on store requisition.
Apportionment.
Okay. How do you calculate under absorption and over absorption of overheads? Can you give me steps?
Okay. So basically, you will find after um for under absorption and over absorption, you will have
First,
your
what will you write?
wait. So first you'll write the
Hmm.
actual amount that is given,
Actual overheads, yeah.
actual overheads.
Hmm.
Then we'll calculate the budgeted overheads, which you'll do by doing the OAR into the actual activity level.
The overheads absorbed. This is not budgeted overheads, it is overheads absorbed.
Okay. So
Yeah,
you'll
then
calculate that, and then you'll subtract it to get to know the over absorption or under absorption.
if actual minus overhead absorbed. How do you
Actual
find overheads absorbed?
OAR into actual activity level.
So if actual minus overhead absorbed is positive, then
Actual minus you have over absorbed. No, wait, you've under absorbed. You've under absorbed.
and if actual minus over absorbed is negative, then
Over absorbed.
both is over absorbed.
No, first one is under absorbed.
And say actual is more, absorbed
Yeah.
is less. Answer is
Absorbed means
positive.
recovered, na?
Yeah,
Recovered, right?
yeah. Answer
Actual
is
is more.
positive. Then
Actual is more and absorbed is less, so you've over absorbed then.
actual is more, absorbed
Huh.
is less,
Yeah.
recovered is
Actual, wait,
less.
wait, actual overheads means the actual expenditure.
Yeah,
And you absorbed less. So that means you've under absorbed.
under absorbed. So answer will be positive, right?
Yeah, positive.
Actual is less, recovered, absorbed is more.
No.
So
So
answer
it is
negative then.
over absorbed.
Okay, fine. You are still confused with under absorption and over absorption, huh?
Yeah, wait. I think now I got it. So absorbed means how much you've recovered and overheads means expenditure.
Hmm.
So if expenditure is more than recovered, that means you have under absorbed. And if expenditure is less than recovered, then you have over absorbed.
Okay. Can you give me the format of marginal costing income statement?
Yeah, so there's you do the revenue, the selling price, minus the variable cost, which will give you the contribution, minus the fixed cost, which will give you the profit.
Just a minute. In marginal costing, your closing inventory is valued on what basis?
Variable cost,
And in absorption costing, your closing inventory is valued on what basis?
total cost.
Total cost. So the difference between the profit as per marginal costing and profit as per absorption costing will be because of what?
The closing inventory.
Closing inventory. Okay, fine. Explain the problems associated with using predetermined OAR in calculating the price of the product.
It may be inaccurate, which will lead to either over absorption or under absorption.
Hmm.
Then if there is if it's over absorption of overhead, the prices will be set too high, which will lead to loss of customers. And if there's under absorption of overheads, the price will be set too low, which will lead to lower profits.
Problems associated with using predetermined OAR.
I just said that.
Problems associated with using a predetermined OAR.
So it will be inaccurate,
Hmm.
lead to over or under absorption of overheads. So over-absorption of overheads may lead to prices being set too high, which may lead to loss of customers, and under-absorption of overheads may lead to prices being set too low, due to which the profits will be lower.
State the effect on profits if a factory does not operate at full capacity.
Mm, if it doesn't operate at full capacity, the profits may be lower.
Hmm.
Then what other effects could it have?
Hmm.
What other effects could it have?
If you don't work at full capacity, then you may face under absorption of overheads.
Hmm.
Okay. You will not be able to recover all your amount that you have spent.
Hmm.
Profits will be lower. Fixed costs may not be recovered.
Okay.
Okay. Two assumptions which may be made when using break-even analysis.
That all that everything that is produced is sold and that fixed cost will remain
Okay, what
constant
is the limitation of having this assumption?
if they assume that fixed cost is remain it that it remains fixed.
We understand the question. They want you to make tell the assumption that you're using when you're doing break-even analysis, and what is the limitation of each of that assumption.
So if the assumption is that fixed cost remains the same, if the
Mhm.
cost increases, the expense will not be accounted for. The profit will be overstated then.
So you assume fixed cost remains the same, but the limitation of this assumption is that your rent might increase.
Yeah,
Your fixed cost can increase.
yeah.
Okay. What is another assumption?
That variable cost is the same per unit.
Hmm.
So if the limitation of this may be that if the variable cost increases, it's not accounted for.
Darling, limitation of this is if you're going to buy more, your variable cost per unit can reduce due to economies of scales.
Oh yeah, okay.
Okay. Understand the question properly first.
Okay, okay.
Giving you 2 minutes to think on this question.
Um,
The two alternative methods that a business could use to absorb their overheads.
I don't know.
Okay. Alternative methods to absorb your overheads could be you can have, instead of having a separate overhead absorption rate for each department, you can have a single factory rate.
Hmm.
You can have machine hour rate.
Yeah.
Or you can set prices as a percentage of prime cost, percentage of direct labor cost, percentage of material cost. This is the way you can absorb your overheads depending upon the activity level.
Hmm.
Okay, so these are different methods. Like marginal costing is one method. Overheads are absorbed based on machine hours. Overheads are absorbed based on labor hours, based on the units produced. Okay,
Yeah.
so you divide that by that activity level becomes your basis.
Okay.
Limitations of break-even analysis.
Limitations will be that they assume that the fixed cost will remain the same and that variable cost per unit will remain the same and that all products that are produced will be sold.
So with this, I think most of the theory is completed, right?
Hmm.
Okay, fine. Uh,